While the poll is still running for all of you, I have the great pleasure to welcome Ms. Katerina Stathopoulou, the Executive Director of Investments and Finance and the Governor of International Propeller Club, Port of Piraeus. Welcome.
Thank you. Thank you. Good evening, ladies and gentlemen. Over the next 30 minutes, my distinguished speakers and I will be discussing the shipping industry's responsiveness over the years. Please allow me to introduce them to you. Mr. Nicolaos Frangistas, Chief Executive Officer of Franco, Compania, Naviera. Mr. Michail Kokkinis, Founder and Managing Director of Golden Destiny Group. Mr. Georgios Makrymichalos, President of Empros Lines Shipping. Mr. John Platsidakis, Honorary Chairman of INTERCARGO. Good evening, gentlemen, and welcome. The maritime industry, good evening, hello to everybody. The maritime industry has faced numerous turbulent waters over time, triggered by wars, world financial crisis, as well as supply and demand imbalances in tonnage. The crisis of the 80s, among other things, was a shipping crisis caused by supply and demand imbalances. Thereafter, shipping has continued on a roller coaster ride leading up to Lehman Brothers. Lehman sparked a world financial crisis, which of course affected the maritime industry. 90% of world goods, world trade, is carried by ships. So money and ships make the world go round. Let's begin with some perspectives. Nico, can you please give us a brief timeline overview of the crisis that shipping has encountered since the early 1900s?
Okay, hello everybody. Shipping encountered around 10 major crises during the last 100 years. Being an international business, its fate is very closely connected with international economical and political events. I will list here the most significant ones. So we had two world wars, the 1918 World War and the 1940-45 Second World War. In both cases, Greek shipping was totally decimated. As an example, at the end of World War II, we had only 150 ships being Greek ships. Then we had three financial crises. The first was the 1929 Wall Street crisis, Black Tuesday, and this crisis created chaos to the world economy and lasted for many years. We had another one that I lived through it, the 1997 Asian crisis. This lasted for 2 years, and the reason was that Thailand decided no longer to peg the local currency baht to the dollar, and then we had many Asian currencies fell as much as 38%, stocks declined by 60%. I will give you a very quick example. 27,000 deadweight ship bought for 9.5 in the summer 97, within 6 months fell to 5.5. And on the opposite side, by 2008, the same ship was worth 24 million. Wow. The third financial crisis is the one Katerina mentioned. It's the Lehman one. I'm not going to spend much time in it. Katerina already said there was no trading, no credit. The global economy went into recession. And as usual, during the crisis, just before the crisis, because of the the China boom, shipowners ordered ships. So in 2010, 11, and 12, there were 3,420 ships delivered. This is a staggering 40% of the 2010 fleet at the time. We stood at 8,110 ships. We had as well an oil crisis, 73, due to the shortage of oil and the dramatic increase of its price, which affected the whole globe. All economies had problems. And then I come to the one, I started my career during this crisis, 81, 85. Probably this is the worst since the Second World War. This was an oil, an economic, an interest rates, and a high inflation. I remember we paid to a bank 23%, and the interest installment was 23%. So you can imagine how bad things were. By 1983, 700 Greek ships were laid up. When I was coming with the airplane, you could see 450 vessels laid up in Elefsis Bay. I will give you another example. A $27,000 8-year-old bulk carrier was worth in 82 about 6. By 84, it went to 50%, about 2.8. By 85, it went even further down, 1.6. During this crisis, many powerful shipping companies went bust. Dry cargo had to operate in an environment of, every year the market was dropping and dropping and dropping. Again, ship owners had ordered ships. So between 81 and 85, we had 1,358 ships. You want me to stop?
Thank you, Nico.
And then we had the COVID crisis that we are living now. Thank you.
Thank you, Nico. I am sure I will come back to you. You are my walking encyclopedia. Okay. Michail, can you please give us please add, if you wish, some more color to what Nico shared with us with your experience as an S&P broker?
Well, Nikos almost covered everything, but I'll try to add something. I mean, the crisis of 80s was a crisis, but also it was a period of opportunities. Because if we look around, we will see that a number of substantial names of the Greek shipping were not existing in the 70s, and they started in the 80s. And of course, one of the big problems of that area, of that time, was the very heavy interest rates. As Nico said, the LIBOR was 18.5. And of course, this did not help the trade. So the crisis, the imbalance is not coming only by banking reasons, but also it's a matter of supply and demand in the overall. This very heavy interest rate caused big problems to the traders, to the who reduced their stocks, and of course by reducing the stocks, they reduced their exposure to the banks, and of course they reduced the trade. Then we came to and of course in the 80s, we faced the phenomenon of the oversupply of new tonnage, which was coming from the Japanese shipyard, because in the 70s and probably the late 60s, a number of Greek ship-owning companies ordered substantial volume of ships. I mean, I know from a shipping family from my island that they had ordered in Japan more than 80 ships.
Wow.
And how many shipping companies have such volume of new buildings nowadays? So then we came to the decade of 90s, which was without very important issues, but we have seen this crisis at the end of 97, when the 7 tigers of the East had financial problems. And of course, this affected also the freight market and affected the new building prices. If we will recall, Panamax delivered 99, it was ordered only 19 million. Figures were very low. And then we came to the decade of 2000, at the beginning of which, I mean, till 2003, it was a very difficult period. And people did not know what to do. I had a nice case where I had a seller who was going to sell a Panamax, and I had also a buyer who wanted to buy a Panamax. The seller was telling me, Michael, be careful, we should not miss the client. and the buyer was saying, Mike, are you sure that we are doing the right movement? Well, this vessel was bought at $3.5 million. And 3 years later, they had an offer for 30 million,
30.
which did not appear.
10 times the price. Wow.
Yes. So, of course, Lehman Brothers was not the cause of the problem. The Lehman Brothers was the trigger. We had seen in the 2000 era very easy money coming into the market.
True. And let me pick on that. Let me take off from what you just said, easy money, and go to John. And John, I would like to hear from your experience over these years, both from the financing side and the ownership side, of course. Have you seen similarities and or differences in how the industry has behaved through these trials and peaks?
Thank you, Katerina. Because I'm far too young, with your permission, I will start in 1980 and
You
not
certainly
in the
are.
that was actually the time in January 1980 when I joined the shipping sector by being an officer at Bank of America in ship finance. And later on, some 10 years later, in the shipping companies. I think I was fortunate enough, first of all, as a banker at the time, to see the crisis of the 80s. It was a great school. Not only because somebody could see how the market could evolve and the peaks and downs, but also the behavior of several personalities in crisis. That was, as far as I'm concerned, a very valuable experience. In the 80s, yes, as my predecessor said, there was a huge crisis and far too many things happened. Companies vanished or other companies established themselves and took opportunity of the status of the market. It was also followed by the withdrawal of international banks from ship finance, not necessarily because shipping was in a bad shape, but mostly I would say, and to a large extent that applied to the major American banks that were very active in Greek shipping particularly, because of the collapse of commercial real estate in the United States. Thereafter, things changed a lot. And I think what really changed the world thereafter was globalization, was the enhancement of world trade, was the activation of China, the huge increase in ton miles in world trade, and the huge expansion of the world fleet. Of course, as a result of that, we saw excessive freight rates that led far too many ship owners, Greek ship owners as well, to go from second-hand vessels to new buildings. And regrettably later on, the mistakes came up and the bill was paid. In terms of financing, the banks did come back, but also the capital markets started being active. In the 80s, also in the late 80s, it was a very shallow market. The understanding was very limited, and I don't think anybody was considering becoming a shipping analyst in the late 80s. Thereafter, we saw eventually public companies mostly addressing themselves to investors, mostly, I would say, speculative investors, but later on to more dedicated private equity. And of course, we saw many fancy products, such as the MLPs and what happened to them. And of course, leasing came as well along the other financing tools. So I think shipping has seen far too many changes within that period.
I will agree with you. George, can you also share with us your thoughts on this discussion? On the trials and the peaks over the crises?
Sure. I mean, I can mostly comment on what happened post-Lehman because that's the most vivid memory I have of a crisis. And I think that I agree, of course, with my predecessors, Nicolaos and Michail, that of course, the Lehman shock wasn't a shipping It wasn't a crisis that was caused by ship owners, something which, by the way, we are very good at. We create our own crisis by over-ordering ships, and that's what happens to such a fragmented market as shipping is. So it was mostly a trust problem, I would say. It was a problem that banks didn't trust each other. They didn't know what they were holding in their books. Letter of credits were not opened, and trade finance basically went into a hold. There was a lot of willingness to trade and for goods to be physically moved, and we saw that very profoundly as the recovery was V-shaped, and after Lehman, freight rates for dry bulk shipping went basically more or less where they were before the crisis. So basically it was a trust problem, and of course that had the ripple effects, because on the whole banking industry, especially in Europe, we saw major big banks, traditional banks, that were lending Greeks. I mean, everybody knows what happened to Royal Bank of Scotland, which holded basically the blue chip companies, had a portfolio of Greek blue chip companies that went basically disappeared, vanished. But also others followed. So the pie went smaller, and there were not many alternatives for Greeks. So then that's where the creativity came in, and we had to try to get finance from other sources, whether that is leasing companies in China or Japan, or working with funds or what have you. And so, I mean, of course, a lot of more equity. We needed to put a lot more equity into the ships. Banks didn't accept to give such a high percentage of finance, which was typically 80% or maybe even higher in some cases, which in my view, that was a good thing, because they created discipline into the market, and gave a good lesson for everybody that you cannot overstretch yourself, basically. And so
okay, let's hope we learned our lesson. John, I would like to go back to you, although you did give us some points, and ask you about the capital markets. You said before that we've become more sophisticated. A lot of products have come into our lives. However, I know that you were with a company, one of the first companies that listed itself in the capital markets in the 80s, and then delisted itself. And I would like you, in very short, concise words, to give me, what do you believe are the similarities or differences in the capital markets, how they have reacted from the 80s until now? Have they changed, or do they continue to have the same philosophy, although there are new products out there?
Oh, certainly they changed. At that time, the public in general was not aware of shipping. Certainly today, money does come to shipping for investment, and having a very good understanding of it. Not necessarily the commitment that the shipping industry was expecting, but they do come. There is plenty of analysis, shipping analysis around. There are the banks, the underwriters are there, the money is there. There's much more money today than in the past. So yes, certainly it has changed a lot. Now, how it is going to evolve in the future, it will continue to be an interesting subject for this kind of money. But there have been some black spots as well. So, of course, memories are short. I wouldn't say that people will necessarily remember, but there have been a number of black spots in this process. But it will stay. There's no doubt about it. Private equity will coming in and out, but it will stay.
Yeah. Nico, can you share with us some similarities or differences in how ship owners have reacted over this time, or financiers, very shortly?
Yes, yes. I think that the fundamental difference between the 80s and now is that the banks at the time were more flexible and each bank had its own policy towards each individual client. Now, the banks, due to the basic regulations, are over-regulated. As George said, we had the specialized ship mortgage bank, we have the traditional banks, and you could find finance, although I remember that when during 85, 84, where things were very bad, it was difficult to get finance. Today, the traditional banks has shrunk, but there's a new phenomenon. There is a new players entering the sectors, which is this private equity funds, which are not investing with equity, but they giving loans to the owners at a very high cost. So we can say that in the 80s, you had high cost of funds with low spreads, and now you have low cost of funds with high spreads, you know.
Okay, so we've made a nice circle, and we'll go back again, the roller coaster. Michail, as an S&P broker, I'm sure that banks may have been approaching you over all these times. Is there a pattern where they're saying the same things they were telling you as an S&P broker when they were having issues with their loans as they were after Lehman?
Well, we have a number of cases, not only during this heavy crisis, that banks were trying to help their clients who had trouble. And the best help that we could provide is to sell the vessel to another buyer who had better financial status, who would be prepared to pay a bit more on the price, provided that he would get an extensive finance.
True.
And we were invited in a number of cases to try to see how we can structure such a deals to save the one and to help the other.
Okay, to save both sides, essentially, yes.
Were in this scheme.
Okay, good. Thank you. Now, gentlemen, it's been very interesting, but we're very quickly. John, I can't hear you. I can't hear you. Yes, now I can.
I think banks in general try to help, with some very few exceptions. What makes the difference, and possibly Michail will agree with me, is the behavior of the clients vis-a-vis the banks.
Okay.
Some people forgot that banks are typically big entities, big organizations. There is a lot of reporting in the past as well. So it's a creature that has to be taken care of in a special way.
Okay, thank you. Well, gentlemen, we're really quickly running out of time. So I have a very important last question, and I want you to be very brief. What do you believe is the strong point of Greek shipping, which has held it afloat and makes it stronger after each crisis? George? One sentence.
All right. The regime, the tax and legal regime in Greece, I think the platform is very sound, very competitive, and all governments have recognized Greek shipping as one of these three pillars, alongside with tourism and agriculture. So I think that's a very important thing. Yeah.
That has held us afloat. Thank you. Nico?
That shipping is in our DNA. I think there's tradition since the ancient times, and what George said as well is very important. So all these things have helped Greek shipping to flourish.
Thank you.
You said I can say more things if you want.
If we have time, give me, John. Can't hear you.
Sorry.
John, can you repeat, please? Yes.
Yes, I would say the adaptability to ever-changing market conditions, the hands-on management, the fact that it is very close to the ship and the crew, and also having the guts to invest and expand in crisis.
Thank you. Michail.
Well, the Greek entrepreneurship, it's a very important thing, but the shipping culture is which is keeping the Greek shipping so much competitive. And we have to help our country and our nation that we have to support the seafarers profession to remain with the Greek hands. Because from the seafarers, we create also the shipping executives.
True.
And if we don't help our shipping industry to have a lot of more and more than less and less seafarers,
Greek
at the end,
seafarers.
we are going to have Filipino shipping operators.
Thank you, Michail. I think you closed it off beautifully, and I think all four of you have put forward excellent points. Thank you, gentlemen, for this very interesting and insightful discussion. Ladies and gentlemen, I hope you have found our panel discussion interesting and enjoyable. I am now going to say good evening and good night and goodbye.
Thank you.
Good
Thank you,
evening.
Katerina. Good night.
Thank you.